Aloha, 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 and a massive hello to everybody. Hope we're all having a great day, a great weekend. This is 50 Pips, rocking and rolling, 21st of February, 2016. No trade calls, recommendations, every responsible for their own stuff. And the fact that you're listening to this means you've read to understand. You accept all the disclaimers on the website and on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So what's going on, guys? Clearly it's all about, are we going to get a bit of a bounce following the moves we had at the beginning of the year or not? So I'm going to try and keep this as simple as possible, right? If we start with the ES, what's going on? So basically we discussed the fact that, on this double bottom here, or this double attempt to break these lows, we had a very aggressive bounce, right? The market had every single excuse or every single chance to smack this down, and then we had what we called, the OPEC bounce or the OPEC bottom, when we started to get those comments on the wires and everything started to rally up. So right here, what we talked about was anyways into these moves into the 1850s, with the 200 approaching, we thought, that the risk reward favored to play for some kind of a move to the upside, possibly all the way back into the 2000 mark, and that's something that's apparent across the board, without going through all the indices. But where's another example? Dow Jones, is exactly the same thing. As we came back down into these lows, previous lows held, came into the 200, about a 1 to 3 risk reward, trying to play the longs back into this 50 and 100. It's the same chart across the board, right? So on the ES here, the big question is, are we going to be able to get through these highs and make it through those 1950s or not? The way we're looking at this, and again, you can look at the previous Sunday Outlook, which was a longer webinar where we discussed this in detail. We'd be looking at 1900 as the pivotal zone going into the week, right? Bull bear line, as long as the market holds above the 1900, we expect the market to try and give a stab at the 1950s. Back below the 1900s, then the 1950s can come into play. So, as to give you an idea, 1900 mid, 1850s support, and 1950s resistance. If we can make it above the 1950s, especially on a day close, we would not be surprised to see those 2000s print, or at least 1970s, quite quickly. So that's what we're looking at. And again, if you look at it on a 1 hour, you see on Friday we came back into that 1900, got a nice little bounce action here, chance to play this even on that 1 hour positive close to the upside. So it looks like that 1900 is a key area that's being defended, and that's what we're going to be focused on. Okay, so also I'd say, don't forget to keep an eye on the monthly. Let's see if the ES ends up closing positive or on the month or not. That's going to be something very interesting to keep an eye out for. Now, linked to that also, is the whole discussion on crude, right? And when we said, we came that into that all the excuses or all the chances to really smack down. There was a second where everything, equities and crude, looked very, very heavy. Then we had those comments hit the wires, and what we said, we discussed that in that Sunday Outlook. You said, once we started to rally there, we made it back above the 27s. It looked, as long as this held, there was a pretty good chance that we try to make it back into this descending trend line. A lot of interesting risk reward trades to play for, at least back into that descending channel rather, right? So again, clearly not an area where you want to get long aggressively into this resistance, but it was a very nice move. Now, going into the week, the big question is this a bottom or not? Is this a short-term bottom or not? We tend to believe that the conditions and the chart looks like we may have put in this this bottom. What we would be focused in going into this week is the 30 mark, right? Any dip back into this mid channel, into the 30 mark, we think this is the key area to watch, right? Daily closes below, we would expect this to start to trade very, very heavy again, possibly aggressively back into the 2750. As long as we hold above or on any move back down into the 30, we see buyers approach, and especially we've got some more comments that could hit the wires this week. We start getting some more comments and we start rotating higher, then our target would be 3520s into 3770s, which is a key level which we've been talking about for a long time. Now, Link to that also yen. When we did the last live update, we just closed down here. We said we looked like we were going to move back into the 115, and that was going to be the pivotal level back into. We actually got upped into 114.80s, then got sold. It's very choppy inside this range. We expect to see comments on the wires. We expect to see verbal, maybe even some other kind of intervention on any moves back down here. We expect the 115 to be defended. We expect this to be very choppy. We clearly do not want to start to get long into the 115s. We do not want to start to get short into the 111s. We think right here there's not an awful lot of edge unless you're still holding lows off those lows, longs off those lows, or if you're holding shorts off there. In here, we consider this mid-range not particularly interesting. We think the interesting levels to engage into the 115s, into the 111s. But again, if equities stabilize, if crude stabilize, and we start to get some risk on tone more in the market, we'd expect that upside to start to attract. And you see it's pretty much the same trade across the board, right? And you can look at it in terms of the commodity currencies too. Even though the RBA, data is not that great, RBA keeps on trying to talk this down. It looks Aussies clearly looks like it's trying to coil now. Nobody wants to believe it because of the RBA and because of the data. But, if you look at the chart, you've got these wicks, you'd have to expect it's trying to mount some kind of recovery. I don't think there's an awful lot of edge trading this here, but if you can see this, if you look at this on the moving averages, it does look like it's trying to stabilize here. And again, everything's starting to point to some kind of risk on back into the market. So, also with gold, we'll have to see what happens. It's the same chart across the board. I think one thing, I'm not going to cover it because I don't want to get anybody in trouble, but we've got a lot of wheeling and dealing on sterling, on GPB, right? As we discussed, we kept on talking about this last week, don't get married to position and be careful because this is just so much headline risk on Brexit, right? So if anything, we're looking to try and scalp some longs shorter term. You see a nice little pop on Friday, but as we said, do not hold over the weekend. Risk is just not worth it, right? So we ended up with a huge but big rally on Friday, and then what's happening now, pre-market we're down 1%, on the other headlines that hit the wires. So there are far better ways to allocate your capital than trying to take shots on headline risk when the market is closed on possible gap ups and gap down. This is all going to be, expect, as we discussed in the past updates, you can go through it. If it looks like Brexit is getting momentum, we're talking about 140s, 135s on cable. If it looks like it's no go, so stay inside, etc., we'd expect to see 155, 160. But it's so choppy that especially overnight, over the weekend, I don't think especially junior traders or novice traders should be involved in that. So again, you can go back. I would encourage you to go through the last video that's posted on the blog because we discussed this in a lot of detail, but I don't want to get anybody in trouble who's not managing risk properly, so I'm not going to really review that. Another thing a lot of people have been asking, it's the same chart, same thing on Swissy. We looked at those longs on that failure to hold below the 200 for a move back into mid-range on Swissy. We got that, and we're stuck in the middle of the range, right? So a lot of the charts are stuck in the middle of a range looking for the next move. Are we going to get more of an unwind or not? That's the big question going into the week. Euro, we discussed this, on that 4-hour close into those highs, right? We said, the only thing you can really do is to look for some kind of retracement back into the 110, 111, right? Actually, we got another chart somewhere here on your, so it's much cleaner. Look for a move back down, and especially, the way Euro's been trading with equities, if equities catch a bounce, you'd expect to see pressure on Euro. Now here we've made that nice little move down on the 4-hour, and now we're back into this breakout zone. So clearly the market has been buying dips, and you see the market has been making a series of higher lows. And the big question is, are buyers going to come in and support Euro inside this range for a continuation higher? I think I'd still look at equities. I'd look at crude for clues here. Clearly, this is a big level. And if equities continue to rally, if crude continues to catch a bid, I would not be stubborn trying to play this to the long side. I think the 109, 108.50 is probably going to be attracting, right? If equities start to trade heavy, if crude starts to trade heavy, then there's no reason for this not to try and take out those highs again. Maybe it needs to fail from a higher level, but you can see that it's really, no matter what kind of lines you want to draw, basically we're at a key support, and it's lining up with all the other charts. So after a bit of a wheeling and dealing across the board, all the charts are starting to move together again, starting to move in sync. So we're starting to look at more traditional risk on, risk off kind of flows. So let's see what happens. It should be an interesting week. If anybody has any comments, any questions, any chart you want me to post, just hit me up on Twitter. I'll post them up on the blog. Thanks for listening. Have an awesome one. And again, stay safe, stay focused, and again, take care. See you on Twitter. Bye-bye, guys.